Hello traders! This video is worth $1 million, so pay attention. 5 years ago I created a new trading concept based only on statistics and probabilities. I was tired of losing money with technical analysis and I wanted something better. So I created an alternative that changed everything. It made me millions of dollars and helped thousands of traders become consistently profitable. Now, a lot of you asked me to explain this concept, to help you understand how you can trade based on statistics and probabilities. Well, this is the video you've been waiting for. Watch it until the end and you will understand how you can trade with no emotions, no decisions, and no market analysis. You will see how you can choose your own trading hours and create unlimited trading systems on any market. Forex, crypto, indices, commodities, you name it. And you will see that this is not rocket science, but actually quite simple. So are you ready for it? Then here is my gift to you. I am giving you access to 2 videos from my Premium Mentorship Program. These are just the first videos in the program. We have a lot more and all are very practical. But these first 2 videos are enough to give you a taste of what it's like to trade based only on statistics and probabilities. So get ready, because this will blow your mind. Now it's time to start our process from zero to understand and start using a strategy based on probabilities only. What is a strategy based on probabilities? This is a strategy based on certain fixed patterns that repeat and have no variables at all. For example, indicators. We can use a lot of indicators. Basically, indicators are those type of patterns that will repeat all the time and we don't need to involve ourselves to take any decisions. Don't believe that this is a type of trading using indicators to indicate the price direction or stuff like that. No, we are not going to use the indicators for such a things. We are going to use these indicators just to have like connection points that repeat all the time in the market and they are fixed. So basically it's going to repeat all the time in the same way without us taking any decision. An indicator that I like to use and you will see in the next video, it's this one. It's called pivot point. You can find it as pivot point standard. I'll also explain to you this indicator a little bit later on. Maybe you know what this indicator means. Very quick brief about this is like this indicator is showing us the resistance level and the support level calculated by this indicator. What it's saying is that if the price is above this pivot point, SP, that means we should looking for an uptrend, and this can be a resistance, then broke and will transform in a support level, and so on, and the other way around for support. But we are not going to use this indicator for this type of trading or for us to know where the price is gonna go or stuff like that. We are going to use it because this indicator is going to repeat all the time. So basically, let's say this is the daily one. So you see, each next day, this indicator is going to recalculate everything and will give us the levels for the next day. We can use them as a connection points because they are not going to be changed during that day. So we can use as a connection points and we will know for sure that we don't take decisions. Basically, we use this connection and it will be the same all the time. This pivot point is not going to change until the next day. This is one of the indicators that we can use, and I'm calling this type of connections just conditions for the trading strategy. So you can use this indicator or any other indicator as a condition, but again, you're going to learn step by step, and in the end, everything is going to make sense. Another indicator that we can use is moving average. Moving averages, you know, the crossover moving average, telling us if the price is under the moving average, that means more chances for the price to go down, and the other way around. But again, it's a condition that we can use not for the purpose that this indicator was created. We can use it as a connection point because we don't take decision. As an example, we can use it as a connection between this one and the pivot point or a candle or something like this. These 2 indicators are the ones that I like to use the most in the trading system when it's come to indicators. But there are so many other conditions. For example, candlesticks. Candlesticks is another type of pattern, another condition that I like to use a lot into my trading strategies. The conditions that will involve candlesticks for me is going to be number of candlesticks that follow a certain thing. Just number of candlesticks. So it doesn't matter how they are looking like. So the condition is just to, after a certain thing is happened, I want to see, for example, like 3 candlesticks that will follow that in a way. But it doesn't matter if those candlesticks are very small ones, are doji, are engulfing, no matter at all. Just a number of candlesticks. Another pattern that I like to use, I will say in this video, okay, just the one that I like to use the most, but there are a lot of ones, and you're going to find all of them on the way. Another conditions, another pattern that I like to use, it's the hours. Not necessarily the time frames, but actually the hours between this hour and this hour. Those are things that will never change, so there is no variables. For example, I can choose, let's say, a high and a low between some specific hours, and just that's it, between 16 and let's say 20. And this is a pattern that I'm going to use, for example, to make a connection with some other conditions. You see, there is no variables. It's just a time frame between 15, let's say, and 20. You see, you cannot take decision, you cannot change it. It's between this hour and this hour, so it's a condition that has literally no variables at all, like all the others. Another condition that I like to use is basically the highs and the lows. As an example, I can make a connection between a high and a low and this period of time. For example, I will identify the high and the low between this period, 15 and 20. Or I can identify the high and the low for the previous day, as an example. You see? So there is no variables. It's just a high, it's just a low. So you cannot say, is this a high, is this a low? You see? There is nothing variable here. This is clearly the low, is the only low for the previous day. And this is the high, is the only one. You see? It's very, very clear. So it's not if. No. This is the high, and this is the low for the previous day. I can identify them, take me like 2 seconds, and that's it. You see? And now, of course, I can add this condition, this pattern, and to a connection with some other patterns, and so on. Another condition that I like to use is Fibonacci retracement. Don't think about that I'm using Fibonacci, looking for a high, and then a low, and then drag Fibonacci, and looking for a retracement at I don't know what type of magic numbers or stuff like that. I'm using this Fibonacci because it's the best tool that helped me very, very quick to identify what I need. I can use anything else, even manual calculation, but why to calculate manually? I can use just this Fibonacci. It's a tool that helped me a lot to create a lot of conditions. So for example, let's say I'm using the 50% between 2 points. Let's say I will identify a high and the low, and then I'm using this Fibonacci to identify the middle. I can use this tool for this. This is the 50%, basically the half. I can just, calculate the pips and manually do calculations, and I will find the middle point. Or I can just use this tool Fibonacci and it will show me straight away this is like a 50%. You see, I'm not using the Fibonacci for the purpose that this tool was created. I'm just using it because it's very easy to create conditions and I don't have to calculate on my own with a calculator or using other very complicated type of tools. It's just a very simple one, that's it. You will find how to connect these conditions on the way. Those are the most used by myself, but it's not that other ones are not valuable, are not good or stuff like that. There's no such things with this type of systems. So you can create any conditions you want. You can create thousands and thousands of conditions depending just what you're looking for in the way that you want to develop your own trading system. And you will understand this step by step until the end of this course. That moment is here. We are going to start creating our first basic strategy based on probabilities. A basic strategy is only made by 2 or 3 conditions, so nothing complicated. After we have our 2-3 conditions that can form the basic strategy, then from these we can add other type of conditions and to get the result that we're looking for. You need to be very patient and take everything step by step. After I'm going to show you this basic strategy with only 2 conditions. This one is only made by 2 conditions, just for you to get used to this trading concept, learning how to do backtesting, and only after that we are start adding conditions, more complicated conditions, and so on. Don't forget, everything it has to start and be learned step by step, because if you go from here and you go to the last videos from this course, nothing good can happen. Everything it has to start from 0 and go through that step by step with your mentor, and do all the time the homeworks, because after I'm going to finish these lessons you will get some homeworks to be done, and if your mentor is going to approve them, you can get the next one. So this basic strategy based on probabilities, it's only made by 2 conditions, and the 2 conditions that we are going to use, it's the pivot point. I told you that this is a condition that I like to use a lot, and the 50% Fibonacci retracement. Repeating this, instead of Fibonacci, find the 50% level between 2 points. You can use any tool or even calculate manually, but we will use Fibonacci, and you will see on the way why is the best tool to use for this, because it's done the calculation for us very fast, and it's much better like this. We are going to use pivot point standard. On TradingView you find it at pivot points standard. For this one we will use daily pivot points, so you see it's weekly, monthly, and so on. So we are going to use the pivot points on daily, and the Fibonacci 50% retracement. Let's get this done. I will delete these levels. Those levels are some levels that I'm using for another trading system that I'm using. So we got them out, and we only have like the 0.5 again, you see. So we could use, instead of that, this, it's still 0.5, but it's much easier like this. We are going to use stop orders in this case, and we will use the sell stop and the buy stop. You already know from the beginning what it's a sell stop order and what it's a buy stop order. This, for example, it's a buy stop, will be a buy position, and this one is going to be a sell position. Now, what we are looking for to put all the time the buy stop at the 50% retracement, and we are going to have, in this case with this strategy, a 1-to-1 risk to reward ratio. Now, the risk to reward is also a trading condition that we are going to learn how to use on the way, but this is going to be like very simple. We will use a 1-to-1. Now, let's explain a little bit the pivot point. The meaning of the pivot point, it's very simple. People are using this pivot point to show them the price direction, and we have P. This is the pivot point, the actual pivot point. Then we have R1, which is resistance 1, resistance 2, resistance 3, resistance 4, which is going to act as a resistance. For example, the price has like more chances to be rejected from here for some reasons. Then we have S1, S2, S3, and so on. This is a support level for some reasons. You know, the price, it's more likely to be rejected from here, and if it's going to be break, then it's going to turn into resistance, and just the old stories. But we are not going to use this tool for this type of trading. We don't care at all. I will refer in this video, I will say it many times, maybe it touch the pivot point. When I am saying pivot point, I am referring to any of this level, R1, R2, R3, pivot point itself, S1, S2, S3. Yeah, just to know from the beginning, when I'm saying pivot point, I'm referring to any of this level. It doesn't matter which one is going to be. Now you understand that we are not going to use this indicator for the purpose that it was created. We just use it because it doesn't have any variables. It's going to repeat all the time every single end of the day, and it's not going to change during the day, so we can use it as a connection point for our basic strategy. Let's start with the conditions of this trading system. This is the end of the previous day, like you are seeing right here, and we just start a new trading day, and we have new pivot points. So the first condition that we want to see, we are waiting for the price, candlesticks, to touch one of the pivot points. Again, it doesn't matter if it's P, if it's S1, R1. So the first condition is we need to wait for the price to touch one of the pivot points. After the price touch one of the pivot points, we will use the Fibonacci tool, and we are going to drag the Fibonacci from the pivot point that was touched by the price, and we're going to drag one until the next one in the upside, and we're also going to drag one from the touched pivot point into the next one in the downside. You see, just like this. After we do this, we will place a buy stop order and a sell stop order from the 50% level with the stop loss in the pivot point that was touched and the take profit in the next pivot point. So after the pivot point was hit, we're going to place the buy stop and the sell stop. You will place them on your MetaTrader 4 or C-Trader, depending on the trading platform that you are using, of course, and also one for the sell. So immediately after the price hit a pivot point, we drag the Fibonacci from the pivot point that was hit into the upside till the next one, and another one into the downside until the next pivot point. Doesn't matter which one it is. With the sell stop and the buy stop order, and it's going to be a 1-to-1 risk to reward ratio. After we do this, we don't do anything else. We are just waiting for the price to activate our order, and after the price hit our sell stop or our buy stop order, we are going to delete the next one. In this case, the price after hit the pivot point, was staying a little bit in this zone, and then come down, hit the sell stop order, and went down, hitting our take profit. Immediately after the price hit the sell stop order, we are going to delete the buy stop order. That's it. What we are doing from this point, we are just waiting, and from this point, the price can go up and hit our stop loss, or can come down and hit our take profit. In any of these two cases, let's follow this one here. Basically, the price hit the take profit, and after the price is going to hit the take profit, automatically just hit another pivot point, and if it's hitting another pivot point, we are doing the same thing. We drag the Fibonacci from the pivot point that was hit into the downside, and another Fibonacci from the pivot point that was hit into the next one in the upside. Exactly same scenario like this one. And what we are doing, we are basically putting again a sell stop and a buy stop order, and we are just waiting. You see the price continue went down, hit the sell stop order, and what we are doing after we are hitting one of the orders, we are going to delete the other one. The sell stop orders in this case was activated, so immediately we are going to delete the buy stop order. What we are doing after that, waiting again, the price activated the order, went a little bit into profit, then went back up and just hit the stop loss in this case. The risk to the ratio is 1-to-1. Now what happened after the price hit the pivot point, in this case was the stop loss, so we are doing the exactly same thing. And that's it. Let's drag it one by one. So just hit the stop loss. We are doing the exact same things. A pivot point was hit. We drag Fibonacci at a 50% level, one into the upside from the pivot point that was hit into the upside one, and one into the downside. A buy stop order and a sell stop order. What happened? The price went up, activated the buy stop order in this case, so immediately we will delete the sell stop order. What we are doing after that, just waiting again. What's happened? The price went again down and just hit the stop loss. The strategy, it's very simple, and like you are seeing, there are no variables at all. You don't take any decisions. There is no decisions at all. You are waiting, the price hit pivot point, then from that pivot point you drag Fibonacci into the upside until the next pivot point, into the downside in the next pivot point, and place a sell stop and a buy stop order. When one of two orders is hit, you are going to delete the other one, and that's it. After that, just waiting again. It's going to happen with only two things. Either the take profit is going to be hit, and if the take profit is hit, that means automatically just hit another pivot point because your take profit was in the downside pivot point, and you drag again Fibonacci upside and downside, place again sell stop and buy stop. Again, after one of those two orders is activated, you are going to delete the other one, again waiting, because two things can happen. The stop loss or take profit is hit, and one of these is going to be hit. That means you are going to place again two orders, sell stop and buy stop, and just going to repeat this over and over again. With this strategy, we don't keep positions open over the night. So basically, at 12 o'clock, the pivot point will change because we are using pivot point daily. And if we are in any trade at that moment, we close the trade manually. You see? So this is a condition. We are going to close the trade manually at the end of the day. So there is no variables, like we close the trade because we feel like, I don't know, something. We close the trade because we don't feel comfortable. We close the trade manually when this condition is met, and this is like an exact time. So there is no variables. You don't take decisions. So you are doing this when it's come to placing the trades, and at 12 o'clock, you click on the close button and close all the running positions. Doesn't matter if they're in loss or in profit. And you're also going to delete all the pending orders if they were not activated until that moment. And this is how you are going to close the day. Like you're seeing, nothing is at your own decision. Everything is just made by the system that you just need to follow. It's a step 1, the pivot point need to be hit. Step 2, we drag Fibonacci until the next pivot points. Step 3, we place the sell stop and the buy stop. Step 4, one of the orders is hit, so we're going to delete the next one. Step 5, a take profit or a stop loss is going to be activated, and we're just going to repeat the process again. Then, if the trades are not closed or we still have pending orders at 12 o'clock in the night or at the end of the trading session, depending on your time zone where you are located, we will manually close all the running trades and delete the pending orders. You just follow the steps, you don't take any decisions. Those are just basic conditions. These conditions are very easy to use, and this is going to be the start for you. Doesn't need to be anything complicated. From this, we will add conditions to improve our win rate, maybe even the risk to reward or decrease the risk to reward. Basically, make the strategy to go with the probabilities into your favor, and you will know the win rate, the risk reward, of course, probabilities, how many times you have a maximum drawdown, what is the maximum drawdown, what is the average drawdown, what is the max negative strike. So you will be able to know what type of money management you should apply to that system, because you will not be able, I'm hearing this so many times, like, oh, in trading you need to have a money management. Yes, but you can't make a money management if you don't know the statistics of your trading system. And many people say, oh, but I know the statistics of my trading system. No, because if you take decisions, if it's only one if should I take this trade, should I not take? If it's only one thing like this, the statistics are not correct. I'm asking people, okay, so what is your maximum drawdown? I don't know. So you see, the money management that you have doesn't make any sense. So with this type of strategy, we will be able to backtest it and find exactly the average drawdown, the maximum drawdown. So only after that, we will be able to make the money management. Because if you have like 10 trades negative strike as a maximum drawdown and you are risking 10% per trade, you will not resist to go over maximum drawdown. So you're going to lose your account into that drawdown. So maybe after that losing strike, which is totally normal to have a losing strike, you will follow 30 winning trades in a row, and you will make so much money. But you can't know because you didn't have your money management made for that strategy and you lost your account into a negative strike. So as an example, if you have 10 trades, losing trades in a row, that means you cannot go with like 10%, 7%, not even 5%, because it's mentally very hard to get over that. But all of this you're going to learn on the way. Now let's go a little bit, just a few more examples. Let's see, this is the end of the pivot points. You can put like 100 pivot points and so on. It's like 15. So you can put here 100 pivot points and go back and back test it. Let's start from here where the pivot point is starting. What we have GBP, GPY. In this case, the day is starting, and like we're saying here, this is very rare. No pivot points were actually hit in this day. So if it's no pivot point hit, that means we don't have any trade today. Then we go into the next day. The pivot point is hit, so our first condition is met. Then we drag Fibonacci up and down. We are placing the buy stop and the sell stop order. And what's happening? The buy stop order is hit, which is mean we will delete the sell stop order. What we do after that, we are just waiting. The price hit the take profit and automatically hit another pivot point, which is mean we are doing this again. We just place a Fibonacci to give us the Fibonacci level, and again we are placing a buy stop with a stop loss and take profit in the pivot point that was hit and the take profit in the next one. Same thing for the short positions. Now what's next? One of the orders will be hit. In this case, the sell stop order. You see the price went back. The sell stop order was hit again. We will delete the buy stop order. Now you see, nobody cares why the price is going up and down. Maybe you already understood this from the beginning of this video. You see, I don't care if the price is going to go up. I don't care if the price is going to go down. I don't care why it's going up or down, because you understand from the previous videos that nobody knows where the price is going to go and why it's going to go in that way, in that direction. We shouldn't care about this. You see, we don't care. Who cares? As time as the price is moving, we want to see the price moving, but no worries. Even if the price is not moving, we can find the conditions that is going to help us making money even in that moment. So you will learn so many conditions, and basically you'll be able to trade in any trading conditions with a lot of trading system. You'll be able to have multiple trading systems with different type of conditions, so nothing is going to stop you. Now let's finish this. You already understood because the system is so simple. So let's hit the take profit. What we do, we drag again Fibonacci from the pivot point that was just hit until the next ones. I'm not going to drag here again because it's Fibonacci already dragged from the other one. So again, we place the buy stop. And of course, again, we are going to place the sell stop. And what's going to happen, you see, the sell stop it's hit, which is mean we will delete the buy stop order. And we leave the trade running. Two things can happen, either hitting the stop loss or take profit. It just hit the take profit and automatically hit another pivot point level, which is mean we will repeat again. So again, Fibonacci into the upside, Fibonacci into the downside. Again, place the buy stop order and the sell stop order. And what's happening, the buy stop order is hit, which is mean we will delete the sell stop order. And next, what's happening next? Stop loss was hit right here, which is mean we will do it again. So again, we drag a Fibonacci into the upside, a Fibonacci into the downside with the buy stop and the sell stop order. It's already becoming boring, yes? It's like, you see, trading is boring, you'll see. Trading needs to be boring. If it's not boring, it's a problem, you'll see this. The buy stop order was hit. What do? We delete the sell stop order. What we're doing after that, we are just waiting. The price went up, hit the take profit. What's going on? Again, we drag Fibonacci, buy stop and sell stop. The price comes back down. We are going to delete, it's activated the sell stop order. We will delete back the buy stop order. And what's happening? The take profit is hit. You already realized this, yes? Like, it doesn't matter what time frame are we using with this. So it doesn't matter what time frame are we using. Okay, we can use 4 hours, 1 hour, daily, 5 minutes, 1 minute. It doesn't matter because the time frame, if we change the time frame, the pivot points are not changing. The 50% is not changing. You see, there is no variable. So just use a time frame that it's more easy for you to visually identify the trades. I use 50 minutes because I don't know why it was set on 50 minutes. You can use any time frames, okay? So it doesn't matter at all. So what's happened, you see, the price went down, just hitting the take profit. What we do? Same things, Fibonacci to the upside, Fibonacci to the downside. What's going on? the buy stop is hit, it went in profit, but more than 50%, very close to the take profit, but it didn't actually hit it. So let's see. So the price hit the take profit, we drag Fibonacci, we place buy stop, we place sell stop, the buy stop is hit, delete the sell stop, we're just waiting, the price come down and hit our stop loss. What we do? Same things repeat over and over again. Fibonacci upside, Fibonacci downside. Look how many trades this day. Again, Fibonacci upside, Fibonacci downside. After you finish this video, you will need to do some homeworks. So it hit the sell stop order. Again, delete the buy stop order, take profit, and the exactly same thing. We are placing a Fibonacci and again Fibonacci, buy stop, stop loss, take profit in the pivot points. So the buy stop is hit, we delete the sell stop, the price come down, hit the stop loss, then we do again Fibonacci upside, downside. You see, you don't take any decisions, you just follow the steps. There is no emotional involved. With this base strategy, we don't looking in this moment for you to have a very good win rate or things like this, because you will not be able to have a very good win rate only with these two conditions. It's just for you to understand how I'm trading, how I'm thinking, start from zero with this concept, and on the way we will learn how to make it profitable, adding conditions and stuff like that. The sell stop order is hit. Again, deleting the buy stop order. So you definitely understood. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades. 10 trades in this day, only won one pair. So you see how many trades you can execute with this system. But again, we'll add conditions and will remain less to increase the win rate of the system and everything. So let's see, we have 1 win, 2, 3, 4, 5, 6, 7 wins, and 1, 2, 3 losses. But again, don't look at these conditions and backtest this looking at the win rate, because that's not going to be very profitable. We will start adding conditions to make it profitable, to make it fit your needs, your hours that you want to trade. Like you're seeing here, those are the trades executed on the entire day, so you don't really want to stay every single minute looking at the charts and taking trades. Of course, if you want this, you can do it. You can create a trading system that will allow you to take, like, not exaggerating, over 100 trades per day easy. We will make this trading system fit your needs. You definitely understood how this is working. Here I am having 20 pairs. In the next video you will get homework, because now you understood how the basic strategy is working. Repeating one more time, we need to see a pivot point that is hit. After the pivot point is hit, we drive Fibonacci up and down at the 50% level. We are placing a sell stop and a buy stop order. We are waiting until one of the orders is hit. After one of the orders is hit, we delete the other one. Waiting again. Two things can happen. Another pivot point is going to be hit. After it's hitting, again, we drag Fibonacci up and down. We place sell stop and buy stop at the 50%, and we're just going to repeat this over and over again for each pair. Here is GBP, GPY. For each pair, it's working in the exactly same way. It's only for you to get used to TradingView if you didn't use it before, and it's made for you to learn how to do the backtesting, because here the backtesting is real, because you don't take decisions. Maybe you backtested before, but I can tell you that backtesting wasn't real, because you find the best thing of what you will see. Getting back to technical analysis or any other analysis, any other trading concept, when you take decisions, that backtesting is not real, because you already see what's happened. Okay? Here, nobody cares what happened before. The trading conditions are the same, so it's going to happen again and again and again and again. You see the difference between backtesting this type of systems. Those are the only systems that can be backtesting, where we don't take decisions. Any other backtesting for any other trading concept is not real, because in the back we can see what's happening, so we take decision on what we are seeing. That's a high, that's a low. You already see what happened, and you take decisions, and you see only the patterns that you want to see, and so on. See you in the next video, when you will get homework that need to be done, and then we go from there. So you finally got a taste of trading with Statistics and Probabilities. What do you think? Pretty cool, isn't it? But here is the thing. You saw you cannot make money with just those two conditions. That was just a base trading system so you can understand how it works. But we can build on this system and make it extremely profitable. Imagine this. You only saw two conditions. But there are millions of conditions out there. I can tell you the most important ones. Even more, I can show you how to combine them in order to create a very profitable trading system. A system that works on any market and a system that lets you choose a specific hour when you want to trade every single day to adapt it to your schedule. Basically, I have all the conditions and all the combinations to create a trading system that fit all your needs. If you want to learn more about it, understand how all this is working and start making real money in a consistent way, here is what you need to do. Book a call with one of my team members and learn everything about the mentorship program. Click on the link in the description and see how this program can make you a lot of money.